Hey, it's Anita, and this is the Anita Posh Show. Hello, everybody, and welcome again to another episode of the Anita Posh Show, where it is my pleasure to keep you up to date with topics around Bitcoin. My guest today is Philippe Bekhazi. Philippe is the CEO of XBTO Group, a company that is active in market making, OTC trading, venture capital, and Bitcoin and Ethereum mining. And Philippe is also the CEO of a company called Stablehouse. As always, you can watch this interview on YouTube, or you can follow us in your favorite podcast player. You can find all the links to these different players at anita.link/subscribe. And now, a short word from my sponsors, and then on to the show. Enjoy! Local Bitcoins is an easy, fast and safe way to buy and sell Bitcoin directly from person to person. Join Local Bitcoins to bring Bitcoin everywhere and secure your financial freedom. Winter is ending, spring is coming, but your crypto storage shouldn't melt like snow and keep cool. That's why Coinfinity developed the Card Wallet, the professional cold storage solution. Order it now at cardwallet.com/Anita and get 20% off. Do you want to stay up to date with the things that happen in Bitcoin from my point of view? Then subscribe to Anita's Weekly, my newsletter with articles, videos, quotes, short tips on how to use Bitcoin and all that for free. Subscribe to Anita's Weekly at anita.link/weekly. Hello, Philippe. Welcome to the Anita Posh Show.
Hi, Anita. How are you?
I'm very fine. I hope you too. It's winter and cold, but yeah. With the new prices, we can be happy, can't we?
Correct. That's right. Yeah.
Okay, Philippe, please introduce yourself to our listeners and to our viewers.
Well, I'm Philippe Bekhazi. I'm the CEO and founder of a company called XBTO, and I also run a company called Stablehouse. XBTO is a proprietary trading company I've started 6 years ago that focuses on trading of digital assets, Bitcoin, Ethereum, and others. And we've become quite large over the years, and we are very active, and we trade all markets around the world. And we invest and we mine, and we've branched out in different activities that we consider as just diversification. So yeah, it's really exciting. And Stablehouse is basically a stablecoin centric clearinghouse and exchange that really focuses on more the utility of digital assets instead of the trading, pure and speculative.
Mm-hmm. Okay, so you basically founded XBTO and then you were bored and founded Stablehouse?
I wasn't bored. I think you can't be bored in this space. Certainly, the space moves so quickly that you have always something a new shiny object that you can focus and develop things on, and that's what's exciting about this place. I don't have a minute to be bored.
Yeah, exactly. Me too. So let's talk a little bit about your personal history. What did you do before, and when did you find out about Bitcoin?
Yeah, so I started my career now 20 years ago, basically. Not divulging my age, but I started out in trading at a hedge fund in the U.S. in New York, fairly large one, mostly focused on equities and global macro. I was specifically focused on derivatives, and I've always been interested in trading and meshing technology with trading, which I find a very interesting activity, and it keeps your mind really active, and you're always thinking about ways to beat the market. Maybe it's not the right word, but it's better to beat the market if you can. So I started in a hedge fund, and then I developed into in sort of advisory, and I started my company in 2010, and made investments in renewable energy, which is really interesting because we're going to get to it when it comes to mining. I got introduced to Bitcoin in mid 2010. I was sent the white paper, which I read fairly quickly and did not really pay attention to it, although I did see some interest in it. But I wasn't focused enough on it. And to me, I need patterns and trends to start focusing on something. It's something out of the blue doesn't really pique my interest. It really has to be a number of points that creates a trend, and then I start really digging into it. So I read the white paper, but I didn't read it like very much in depth. And then a couple months later, I was told again about it, and it still was very early on, right? 2010, 2011. We're still very much in the early days of Bitcoin when it was really trading. Well, it was barely not. We couldn't even tell what price it was trading. It was very, very illiquid. In any case, I think I was looking at the price of Bitcoin as like below 10, and then at 30, and then at 100, and basically when a friend of mine came to me and said, "Oh, have you heard about Bitcoin? Have you done anything with it? Because that's really like it really fits you, because it's sort of finance and technology." And I said, "It's funny that you mentioned this because I received the white paper about 6 months ago, and I went back to the white paper. I started, digging into it, and then I started doing a little bit of mining, a little bit of tinkering, and it took me a while to actually figure out what I really wanted to do with it. It was really early on, and people were doing all kinds of things. It was very, very much early, and it was hard to really even find partners to work with because it was a small community. And it was a community that was quite marginalized at the time because people really didn't understand Bitcoin, right? The way they're starting to understand it today. Back in the day, I mean, you couldn't talk to a bank credibly and say, "Hey, yeah, my business is Bitcoin." They would look at you and think you're crazy. And so it took a while, and it took a lot of networking and thinking, and then I created XBTO in February 2015, and from then on it was just iterating like crazy, and trading and finding new ways to build the ecosystem, which is very important, and we'll get to it.
And have there been other properties in Bitcoin besides the fact that you were a trader and working for a hedge fund before? So you were in the traditional financial system, working in the traditional financial system. Have there been other properties that interested you, where you thought, "Wow, this is going to change the world," basically, or something like that?
Apart from Bitcoin.
No, I mean
in a completely
in
different...
Bitcoin, but apart from the trading side.
Mm-hmm. Well, what really interested me in Bitcoin specifically is the concept of counterparty risk. And when you went through a 2008 event and you're working in an environment that is completely built on counterparty relationships, because you have a relationship when you're in a hedge fund, you have a relationship with a prime broker, you have a relationship with executing brokers, you have a relationship with banks and custodians. And when you go through an event where there's significant distress in the system, you start thinking about things you had never thought about, right? When you think about, "Oh, I'm going to trade this euro at 120, I'm going to try to make 50 pips on it." Yeah, that's a very sort of very, very narrow mind of thinking. That's really trade technicals. But when you think about, okay, I'm going to trade this, but who am I trading against? Is this person going to be able to settle this trade? Am I going to get my P&L? And these things start coming into sort of the trade, then it gets a lot more complicated. And you think about, wow, this is wild, because now there are so many different parameters that are coming into play. And I have to think about all of these. I have to choose which counterparty I want to trade with, which custodian I want to put my assets in. It really broadens um, sort of the trading environment, and you want to obviously you want to mitigate your risk as much as possible. So yeah, when Bitcoin came out, it was in a way revolutionary because you did not have to trust any one person. Um, Bitcoin made it so that you had a settlement layer that basically within 10 20 minutes would give you finality on a settlement. So your trade didn't really matter. It really didn't matter who you're trading with, in the sense that if you could get certainty that they were good for the money, and you could see it on the blockchain, when the transaction was done, it was done. It was not going to get undone. So that's real good and important certainty. And this is something that today, people are starting to think about again, and maybe a little bit differently in the way than they were thinking about in 2008, where it was more of sort of counterparty risk, direct counterparty risk, Lehman and banks just going under because nobody really understood what kind of derivatives risk, what kind of books risk were in their books, and if they were even able to stay in in business the next day. Right? It was that dire. It's like, okay, how much cash do they have? We don't know. Money was going in and out the door, and out the door more than in, obviously. And so when you have this issue, the problem is that it precipitates further. You start doubting, it really becomes very difficult for the counterparty that's affected to recover from it. It really requires a huge amount of money or external backing, and that's what's going on here, right? In this pandemic, is the Fed is saying, no problem, we're coming in with $1 trillion or $2 trillion or $3 trillion, and I stopped counting because at this point, the money supply has expanded by 20 to 40% in the last year. It's okay, great, all right. So the Fed is really backing this, and they really want to make sure that people, stay employed and keep and have their confidence sort of restored and retain a way to continue their life, even though it has created significant strain on the economy. So Bitcoin in these both cases, right, provide value, and that's really critical, right? There's the counterparty risk issue, and then there's the fact that the monetary supply is fixed. You have a known scarcity that is not going to move unless the ecosystem, the developers, the miners, and the users decide that, yeah, it makes sense at this point to upgrade the encryption or increase the monetary supply. It's not set in stone, but it is very difficult to move, right? And that's what's critical about Bitcoin. It's a decentralized but very democratic asset. So much so that it is very difficult to change. And we've seen it through the scaling wars of a couple of years ago, where the network was so there were so many transactions, so many people wanted to trade, that the fees were going through the roof, and people were, a lot of people were concerned about it. They were thinking that it should scale the way Visa would scale, and by centralizing, by making blocks bigger, by just basically going in a way where, which was basically antithetical to the way Bitcoin should operate, which is a way where there are as many users as possible validating transactions, right? And I think there is a fine line. There is an optimum point where sort of diversification and decentralization kind of stop having value and starts really impacting the network. But that has to be the optimization. You have to optimize for censorship resistance. You have to be able to stop one or a couple of players from taking over the network. And that's critical. And so Yeah, Bitcoin is all about its security. That's really what makes its value. It's not its transaction per second. It's not its speed. It's not even its technology, underlying technology, which is now 12 years old or so. Obviously, it upgrades slowly, but it's important because it's consistent, it's deliberate, and it can't be iterating too quickly at this point. The network is too large, and there are too many vested interest in sort of having that status quo.
Very well said. Yeah. And you mentioned the transaction fees in 2017. Actually, up until today, I haven't heard anybody complain about the transaction fees at the moment. That's interesting because, I mean, price, yeah, in Bitcoin. I mean,
in Bitcoin, yeah. Mm-hmm. Yes, so Bitcoin managed to scale through Segwit and through other improvements that were kind of minor, but in a way important. And people started understanding that Bitcoin is not a payment system. You're not going to buy your coffee with it. You're not going to buy a ton of things with it. You're going to consider it as digital gold. It's something that is collateral, that is transparent, that is known, that has a price. And you use that collateral, right now mostly to trade, but you could use it for, a lot of people are right now, we've seen it in the last couple of years, loans and borrowing against dollars. So people are using it in a way that is more appropriate to what it is than maybe before, where they were hoping that they could, move a couple cents and move, $1 worth of Bitcoin to do this and to do that. That does not make any sense based on its underlying technology. But Ethereum, for example, has a real problem of scaling right now, right? Because people use it a little bit differently than Bitcoin. And it has and while it is faster than Bitcoin in its framework, at some point you're going to reach a level where it's still a decentralized blockchain. Some will disagree that it's very decentralized or as decentralized as Bitcoin, but that's sort of still one of the axes of what you're trying to achieve, right? Censorship resistance. It has to be. Otherwise, you might as well just use an Amazon cloud and just be very centralized to do whatever you want to do, which is, and right now you've seen it with DeFi. There's so much problems with the network right now in Ethereum that it's sort of starting to spill over into other networks, other protocols, level 1 protocols, Polkadot and Solana and Cardano, and all these for the longest time haven't done very well, EOS. And now they're starting to go back up again because there's a little bit of a concern that Ethereum's not going to be able to scale. And it's still a proof of work system, much like Bitcoin, right? Where you're actually solving a puzzle using electricity and GPUs or ASICs for Bitcoin. And that has a sort of real limitation in a way. But it's also a good thing. We can get to that later if that's of interest. But we're a miner. We mine both Bitcoin and Ethereum. And of course, right now, mining Ethereum is just amazing because it's the fees are through the roof. But it is not sustainable. We'll make money, I suspect, for next 6 months, maybe a year. But at some point, unless it scales, it's going to lose the network to other protocols.
I mean, can you please tell me, and for listeners, the difference between proof of stake and proof of work? And no, start with Ethereum. I mean, now they also have proof of work. Where's the difference in between Bitcoin's proof of work and Ethereum's proof of work? Is there?
So Bitcoin and Ethereum both started as proof of work systems. They have different algorithms. And proof of work basically is when you're basically solving a puzzle using electricity and hardware to secure the system. Um, and that has its limitations, as I said. It depends on the cost of power, the availability of power, the cleanliness of power these days. There's a lot of talk on, where is this power sourced? Is it dirty power? Is Bitcoin,
Boil it.
bad for the
Yeah.
environment? And that's a big discussion. Happy to touch on that for a bit a little later, maybe. Um, and and there's a scalability issue. Um, so proof of stake sort of takes that away completely and says, okay, now we're basically at, there are different economics and different ways to do proof of stake, but just generally, it's you can think about it a little bit like a couple of banks having a vested interest in making a network run, right? So if a bank follows KYC ML properly, they stay in the network, right? And banks trust each other. They do they have a counterparty relationship. They settle trades. But if they're starting to be operating in a way that is not acceptable, then it gets cut off, right? Proof of stake is a little bit the same way. But in this case, you're actually putting money as a node, as a validator, and you're saying, I want to be part of this network as a validator, and I'm going to put $10,000, $20,000 in token, and I'm going to validate. And if I'm not operating or doing the right thing, I'm going to get penalized, and that stake can get sort of surrendered or lost to the network. So that's basically what it is. But what that does is that it allows to scale the system dramatically because now you don't have any hardware constraints.
But it's not so secure, as I understand, because
It's unproven to a certain degree because while there are a lot of proof of stake systems, they're still very much centralized, and they're obviously not as big as Bitcoin and don't hold as much value as Bitcoin. The two biggest blockchains today remain Bitcoin and Ethereum, and they're both proof of work. After that, there's a lot of proof of stake, but a lot of people are concerned about their centralized nature.
yeah, exactly. So you were touching your own mining facilities. Can you tell us a little bit more about that?
And we didn't time it quite right, but for us, it was a bit of a diversification opportunity. In mid 2017, we were at that point only traders. We were just trading on multiple exchanges, and we said we got the opportunity to make an investment in the mine. We had secured extremely low electricity costs and low real estate costs, so a very low or inexpensive lease, and in a place where there was naturally colder air. So it's a sort of colder climate, which is good because you don't want to use a lot of electricity cooling your equipment because that's becomes inefficient. So you want to maximize and optimize for all of these variables as much as you can. And so we made a certain investment in this mine that's in upstate New York, and it was mostly a GPU mine, but through the there was a bear market between 2017 and today, a pretty significant one, and one that we thought was over, and then there was another dip lower, and that created a lot of distress in mining, and we were able to luckily obtain some inexpensive gear that we were able to sort of salvage and put on our mine. And so we've done quite well. We've always had a very low cost of electricity, which is critical to making money, even though the hash rate goes up, the difficulty rate goes up, which is as more and more players or more and more miners join the network, it makes the difficulty rate go up, which makes the existing profitability go down for the existing players, right? That's sort of like the algorithm behind that's sort of securing Bitcoin. So we were always very considerate about the way we're going to mine. That power is hydropower. It comes from Niagara, and it was power that basically wasn't used. So if we weren't using it, no one else was going to use it because, as you know, electricity doesn't really get stored. I mean, you can store it with batteries, but you can't store all of it, and it's very, very inefficient today to store electricity. So from our perspective, we were using green energy that was not being used. We're not taking away from anyone. We're not raising the prices to anyone. And yeah, we were securing a network. We were securing a very valuable monetary network that we thought, and I think that's been validated. But at the time, we thought, we're going to go sort of deep down the Bitcoin and sort of call it blockchain if you want, a whole, and be a meaningful player that was diversified and that was contributing to the ecosystem in different ways. Liquidity provider, miner, investor. That's sort of our goal, and that's our objective.
Yeah, I mean, it's cool because you then have your own mined Bitcoin that you can sell or trade.
Correct. Well, yeah. Look, I mean, at the end of the day, we're not a huge miner. We're certainly not as big as some of those dedicated miners out there. But it is good to be in this business because you understand the economics, you understand the issues that other miners face, and therefore, for the rest of the business, then you can provide better value to them and say, hey, do you need a derivative to hedge your hash rate, your Bitcoin price, through options, through futures, through other structures. So, it had a double bottom line in a way.
Okay, so that
it was, if it made money, great, but also we were understanding a little bit better and we were contributing. So
interesting. So there are also financial products, of course, for miners, for the mining industry. I never thought about that.
Yeah, absolutely.
Yeah, interesting. And we also, if we take the word clean mining, this could be like what you are doing with water from the Niagara. But there's now a new non-profit organization called the Digital Currency Miners of North America, who say from themselves they will do clean mining. Basically, they will take the OFAC blacklist of Bitcoin addresses that the government says you are not allowed to use or to send money to because they are from Iran or anything from the bad guys, Are you going to do this too? I mean, will you join this mining non-profit trade group, or are you not interested in censoring transactions, basically?
Yeah, look, I think there are better ways to address this particular issue because censoring an address doesn't do anything because this address can be totally throwaway. So when an address is tainted, we'll just say tainted. It's been an address that was involved in proceeds of crime or terrorism or whatever. Then when you put it on the OFAC list, all you're doing is saying to the perpetrators, you can't use this address anymore. And so they're just going to change. You're not solving anything. You can do that, sure, you could, but it doesn't really do anything at the end of the day. At least I don't think so. And that's one of the issues that I have with a lot of these tracing, software to say, oh, this is coming from an address that's is being blacklisted. The problem is that there are very finite amount of coins out there. There are 21 million Bitcoins. And at some point, you can't control that any one of these Bitcoins is not going to be involved in some way, shape, or form, even in the most minute way, right? A couple cents in a wallet containing one Bitcoin, right? And then this whole wallet and this whole Bitcoin becomes tainted. And then this Bitcoin moves to a properly, perfectly whitelisted address. And then what? This gets tainted also, and then everything gets tainted at the end of the day. So I don't think it's a very effective way to deal with the issue. Although I will look into it, I'm always interested in making sure that we do not, contribute without even knowing it to sort of bad actors, right? But bad actors are everywhere. I mean, they're very much so in the U.S. dollar, in cash. Drug money is largely being transacted in U.S. dollars, and we're not doing any of this. Although it's a very different system, obviously, but we're not blacklisting U.S. dollars cash. So it's a complicated. It's a complicated issue. I don't think there's necessarily a right answer, but there are certainly things that I think in this space that we really need to think about what the intent at the end of the day is, and that we're not going against the whole sort of ethos of the space, right? I think there are ways through KYC ML to say, well, you, Mr. X, have been involved in this and that, and therefore we can't transact with you, and then that's it. I mean, focusing on their Bitcoin or their Ethereum, I don't think makes any sense, because they'll find a way to go around and hop a couple times in a different wallet that they can open very easily, and then what? What did you achieve? I think so. I think not much, and you're basically not helping yourself. You're not helping anyone, and not to say that they're not doing, something that's very good, because again, I haven't really looked into it in detail. But my gut feeling is when you're starting to put Bitcoin addresses on OFAC list, I think at the most basic level, I think it's useless.
Mm-hmm. There's another, let's call it FUD story. I mean, part of it is true. I mean, there is some kind of minor centralization in China, but I think it's decreasing in the last months and years. And there are more and more mining facilities in North America, I think. I mean, I heard also in Pakistan, sure. For instance, a region in Pakistan is now starting to mine Bitcoin. What's your take on mining centralization in China? Is this in any sort a danger to Bitcoin?
Bitcoin belongs to the world. So when you have too much of something somewhere, it's not a good thing. I think Chinese centralization was an issue a couple of years ago. There's still major Chinese miners. But as you said, there has been a lot of investments made in the U.S. Sort of counterbalance that trend. And I think at this point, it's very hard to exactly know who controls what, because pools aggregate mining power from different places, and you don't exactly know where they're from. But I think today, Bitcoin mining happens in Argentina, it happens in Venezuela, it happens in the US, it happens in France, it happens in Russia, in Iran, in Japan. It's global, and you can't stop it. Meaning, there's nothing that you can do. I mean, you can always flex your muscle if you have sufficient breadth of, you have a big army, you have significant claims on people's interest. You can push your weight around and say, Bitcoin is more mine than yours. But at the end of the day, Bitcoin is not designed to be that way. You can't really own Bitcoin because if you own Bitcoin, it's worthless. It loses all of its value. So if China tomorrow said we are commandeering Bitcoin and Bitcoin is ours, well, guess what? Bitcoin is not going to go to 100,000. Unfortunately, it will probably go to zero, or it will go to a yuan denominated value that is maybe used within China. I don't know. But it has to be global for it to be valuable to everyone. That's the whole thing about, again, counterparty risk in a way in Bitcoin. That's kind of the same concept, is you need to make sure that not one entity, person, state actor has too much claim on the network.
Exactly. And I think in the case that you just painted, that China would overtake Bitcoin, then we would have maybe a hard fork, and you have a Chinese Bitcoin and a global Bitcoin. Yeah. Yeah.
Exactly. I mean, it would be completely pointless. And we've had many hard forks, by the way, on Bitcoin, as you know. Even in the early days, when you look at Dogecoin or Litecoin, these are basically sort of forks from Bitcoin, and they're just renamed, but they use the same underlying technology with slight changes to the code. So you can always fork Bitcoin. That's easy. But what you cannot fork is the network. You can't say it's like Facebook, right? And I like to use Facebook as an example. Facebook is the proprietary version of Bitcoin in terms of a network. You can't fork Facebook because you don't have access to the network, the code, right? The code is owned by Facebook, and they maintain the technology, and they have a huge amount of users. And the value to the user is that everyone else is on it, right? That you have your friends on it. If you don't have your friends on Facebook, why are you going to join Facebook? Same with Bitcoin. If everyone uses Bitcoin, then you have more and more adoption, right? So you create a nice network effect. What's interesting with Bitcoin is that it's open source. So if a sufficient amount of the network says, well, I'm not happy with the way Bitcoin is scaling, let's take this code and make some tweaks to it, and it's like religion, right? You'll just fork out and you'll create a new religion. Right, and great if it works, and you manage to grow that network, that's fantastic. I'm certainly not for a specific kind of Bitcoin. I think the one that we all know as Bitcoin today, the one that most people are buying, makes the most sense, at least in my mind. It's the one that favors decentralization and where the liquidity is, and where where the network effect can really take on. Things like Bitcoin Satoshi Vision or Bitcoin Cash, they have a different philosophy, and that's great. And they decided that they thought that this was their version was better, and they went on and did it. And I don't know I don't think it's working very well. But that's great. That's the whole point of it's democratic in a way, right? People are voting with their money.
Exactly. So let's get back a little bit to the so-called wasted energy that's used for Bitcoin. What is your take on that? I mean, there is a high electricity need. Yes, that's right. What is your opinion? What do you say to the critics?
I just, I think it's when you analyze something, you have to be fair in how you proceed in your. It's a little bit like, developing a vaccine in a way. You have to really be objective about and go through all of the process to really ascertain whether something is of a certain efficacy or not. And the same. In anything you do, any analysis can show you one thing if you disregard half of the data. When we compare Visa with Bitcoin, you say, well, Visa is a lot cleaner than Bitcoin because it can transact billions of transactions per second, or 150 million transactions per day or something. I don't know what it is, but okay, that's great. So Visa is a payment network, and you're looking at it that way, very, very in a very siloed way, because Visa doesn't work in a siloed way. It relies on banks. It relies on intermediaries. It relies on all kinds of things that also consume power and people, right? So you have to look at it as a whole. Okay, what is the banking system's carbon footprint? And then what is Bitcoin's carbon footprint, right? But Bitcoin's not necessarily banking. They have two different uses. So when you look at Bitcoin and you think, okay, well, Bitcoin is a store of value network. It's a digital gold, a gold 2.0 network. Then you have to look at it from that perspective. And you can't compare, as one would say, apples to koalas, right? Which is, it's fair, because they're completely different things. And so there's no real way to say Bitcoin is a whole lot dirtier than Visa. It's just impossible to say at this point. But Bitcoin, for the most part, uses green energy. And what's interesting with Bitcoin is, while you are always trying to get to the lower cost of electricity, right? Because that's really your goal. You have to be more and more competitive on your cost of electricity. Then usually what ends up happening is that you end up towards things that are kind of cleaner. Hydroelectricity is usually very inexpensive. Like solar, for example, is infinitely available, but unfortunately today, while you can create huge farms that get to 4 cents a kilowatt hour, it's not as cost effective as hydro or geothermal, or I don't know that anyone is using nuclear at this point to mine Bitcoin. Maybe indirectly, but you have to. So yeah, in a way, luckily, unless you're Iran, where you have unlimited amounts of black gold, right, or oil, and you're subsidizing, then maybe you have a little bit of a problem there. But it's very regionalized, and so from my perspective, I think Bitcoin in general is actually quite okay. It's not a significant contributor to greenhouse gas, and the carbon footprint is, not that high. Actually, a lot of people say, oh, you got to go solar, you got to buy those solar panels because, you need to be green. But, if you really were, again, objective with the data, well, what do you do with those panels after, their utility life, their shelf life? Okay, well, there's the whole recycling of them. And that's not necessarily very clean. But people tend to forget that. So it's not a very simple equation. I would say in general, Bitcoin is not dirty. I don't think it's dirty.
Yeah,
It's more on the green side, actually.
yeah, and also the mining, the proof of work mining is there because it makes Bitcoin secure. And what would you have if you have I don't know how many billions is it now in market capitalization, 600 billion or 700? I mean, and so many people depend upon it. So if it wouldn't be secure, then it wouldn't be the same.
Right. So there's value in securing the Bitcoin network using any means necessary, because it elevates. I hope that eventually it will elevate the quality of life of people on the planet, because it'll be a medium of value that everyone can agree on. Again, that's cross-border, that is not owned by a particular state. So I think in the long run, it has significant value. And compared to gold, for example, I think it's much better than gold. It's easier to store, it's easier to insure, it's easier to move. It's divisible. You can use it for, you can use it for payments, not coffees, but you can use it for buying a Lambo, larger
Yeah.
payments, I would say. But yeah, it's so it has. If you look at it from all of its different features, it's just amazing technology that is really going to contribute to a higher quality of life, because it's going to make accessibility um, to financing and to sort of like decentralized banking a lot easier. It may not be based on Bitcoin per se. It may be on a second layer solution that is more adapted to smaller transactions, cheaper transactions like Lightning and all these scaling solutions. But at the end of the day, still underlying all of this is the level one Bitcoin, layer one Bitcoin.
And let's not forget that gold mining has also very high environmental costs, yeah, that nobody's talking about. Yeah.
That
Yeah.
is true. Mm-hmm.
Um,
Mm-hmm.
let's talk a little bit, because that would interest me, mining profitability. It's very complicated. It seems to be very complicated. Um, and there's always this question, what is driving the price? The mining, the hash power, or is the price driving the hash power in the mining network?
Well, usually, yeah, it's sort of the chicken or the egg. Um, well, look, what incentivizes people to mine is the expectation of profit. Um, and the biggest variable cost to mining is your cost of electricity. Um, this, the second thing that's really important is your cost of acquiring the hardware. And that hardware, unfortunately, is not unlimited. Therefore, it rises. The cost of the hardware rises in a bull market and declines in a bear market. So I would definitely say that price drives hash power, and because in a bear market, if you cannot make money, you're turning off your machines. Most people turn off their machines. Luckily for us, we have power that enables us to pretty much always, at least so far, been on a cash flow positive basis. Doesn't mean that the mine is profitable on an accounting basis, but on a cash flow basis, it remains positive. So it keeps us going. Um, so in a market that is significantly bullish, like right now, where we're approaching, as you were saying, 50,000, which is basically close to $1 trillion in stored value, give or take. And that is attracting miners, and those miners are looking at the hash power difficulty rate, and they're calling their hardware manufacturers, and they're going. There are some calculators online where you can quickly put in your cost of power, your cost of hardware, your the current hash rate and difficulty rate, and you can see what comes out of it. And if it's worth your time to go and mine, then you're going to do that. And if you do that, then you're going to bring that hash rate a little bit higher, because you're contributing more to the power to the network, and therefore you're making you're just pushing the sort of the hash rate higher. So yeah, it really depends on price. Clearly, I mean, obviously, if Bitcoin went to zero, no one would be mining.
Yeah. And that's the interesting thing, that when it was zero, people started to mine.
That was look, and that's what's really interesting when you're starting to make a market. You're creating a company. You're trying to create a momentum from zero, from nothing. That's really hard. So that really requires a sort of external sort of prod or incentive from a founder who has a vision, and he's putting all his resources, his time, his energy, his money into making something that is zero into something that is potentially a unicorn, or billions. And so yeah, that's sort of typical. But it's harder when you go from a billion to zero to keep that going than when you go from zero to billion. It's a sort of different mechanic, and sort of starting from zero when you've reached the heights is so difficult. It's really a mental exercise. So that's I mean, maybe that's why, if Bitcoin were to go to zero today, I don't think, in its current form, I don't think it would be resuscitated. I think it would be dead. But I don't think Bitcoin is going to zero by any stretch of the imagination. And I think that even if you had things like a ban on Bitcoin or a certain discovery on quantum encryption that basically said, "Oh, I can break Bitcoin's encryption system and I can basically unlock all of this value." By the way, this value would go to zero if it were out there. Even with that, I don't think Bitcoin would go to zero, because again, it's an open system. You can basically decide to fork it and to take a snapshot at a certain point in time, change the encryption mechanism, and off you go again. And so that's very powerful. Obviously, it would be a mess, but it would not be necessarily the end of it.
Yeah, I think Bitcoin's strength is its community of people and their mindset. Yeah. And that they are willing to work on it even without earning money, because that was what happened at the beginning. Yeah, it's an idealistic thing in a way to work in Bitcoin, as like in all the open source developments. It's a very idealistic mindset people are having. Yeah. Okay, great. So let's close this with a little future insight from you. What do you think is going to come in the next months and years in Bitcoin?
So I've always looked at things 10 years out, because it's so difficult to predict what's going to happen tomorrow, next week, or next month. 2021 has been an incredible year so far. I mean, 2020 was just insane in its own way. But for Bitcoin, 2021 has seen some significant, developments, and corporates at this point are starting to really have to ponder whether or not Bitcoin is an acceptable treasury asset that they should consider on their balance sheet, and so I think this trend, with the obviously the most recent announcement by Tesla to put on a decent amount, and we're talking 6-7% of the sort of liquid balance sheet or cash into Bitcoin. It's a significant move, and it's getting people to really start asking themselves, what have I missed? What have I missed in the last 12 years? And should we do the same? So I think institutions, corporations, and eventually governments are going to start getting off zero, right? They may get to a 1%. And if you think about all of that money going into basically only just a couple assets, and they're going to start with Bitcoin. And then eventually they'll go into Ethereum, and it'll find its way into other digital assets. But I think Bitcoin is going to be sort of the gateway digital currency that's going to receive the most inflows initially. So I think at this point, while we're up significantly in the last 6 months, because we went from 10,000 maybe in September to now almost 50,000, so 5x in less than 6 months. I still think that we're not in a bubble in that perspective. I mean, you could always define what a bubble is. I mean, obviously the dollar is in kind of in such a weird position right now with all of the printing. You could say that there are some inklings of a bubble starting to form in many different financial assets. It hasn't really shown itself in consumer goods. So therefore, the CPI and all of these metrics that sort of measure inflation are still kind of not showing anything. If anything, maybe they're showing deflation. But in financial assets, it's a very different story. When you have companies that are basically worth almost zero, going to tens and hundreds of billions of dollars for no good reason, you start wondering, well, maybe there's too much money chasing too few assets. And with bonds and fixed income yielding what they're yielding, and sometimes they're yielding negatively, then what do you expect is going to happen? People are looking for yield, they're looking for return, and why not Bitcoin?
What else? I mean, at the moment.
It's the only known scarce asset that you know for sure.
Yeah,
Again,
exactly.
nothing's for sure, especially in crypto, but with a fairly high degree of certainty that it's not going to be, it's not going to change in the next foreseeable future. So 21 million Bitcoin to ever be mined. Why not own a piece of the future?
Yeah, exactly. Yeah, thank you very much. Anything we didn't cover that you want to say that we maybe missed? I mean, I think we could do another interview if you're interested about Stablehouse, because I think you're building a currency for Bermuda. Is that right?
Stablehouse is basically focusing on sort of more traditional, or basically improving traditional financial rails. Improving visas and SWIFT and all that, using stable coins and blockchain technology that is not necessarily like Bitcoin and Ethereum related, sort of more other kinds of technologies that we're starting to talk about. And I think for a lot of people, they are still comfortable with their dollar and their euros. When they buy a coffee, they don't want to think about if they had to pay in Lightning, which, you could potentially buy a coffee with Lightning if all the merchants accepted Lightning, which is not the case, then you could potentially do it. But it's a mental exercise that people are not comfortable with. So when they buy a coffee, they're thinking, oh, it's $3, and that's what they want to spend. And they can spend it in cash. They can spend credit cards. They could do a wire, which would be crazy, or they could use a stable coin, and eventually potentially a central bank digital currency, which is still very much in the early beginnings. We'll have to see where that goes. But yeah, so this is what we're trying to focus on, and we're trying to provide value to in Bermuda specifically because it's great. It's a smaller market, and it's a market where people adopt technology quite quickly. Actually, it's a fairly wealthy market, and they're very open to the world. So yeah, we're working with the various government entities to figure out what can be done using Stablehouse technology and existing open source technology.
So you're diversifying your companies basically.
Yeah, we're going into, so there's digital gold, okay, it's store of value, that's one thing, and then there's payments. Is there something that we can improve upon in the payment space?
Great. So please tell us, where can people find and follow your work?
Mostly on Twitter, LinkedIn, on our website. Fairly active on my personal, but we have corporate Twitter at XBTO Group, at Stablehouse.io, and I give podcasts once in a while, and I love to communicate with the community. So I love to engage. So I'm looking forward to potentially doing another one with you, Anita. It was a pleasure. And thank you for your
Yes,
time.
thank you very much as well, and have a good day. Bye.
Bye.
Thanks so much for joining the Anita Posch Show today to learn more about Bitcoin. You can find the show notes for this conversation on anita.link/show. If you want to get the best stories in Bitcoin from my point of view in your mailbox, go to anita.link/weekly and subscribe. And if you have a question or just want to send me some feedback, drop me a line at hello@anitaposch.com. See you next week when it's time for the Anita Posch Show. Music, start with yes, delicate beats. Content, idea and production, Anita Posch.